you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to Morningstar. I'm Emma Wall, and here with me today to give his 2 US stock picks is Stephen Moore, manager of the Artemis US Extended Alpha Fund. Hello, Stephen.
Hi.
So what's the first stock you're highlighting for us today?
Yeah, I'd like to talk about Comcast. Comcast is a provider of video as well as high-speed data and telecommunication services in America. It's a company which is benefiting heavily from having those three products which it uses to compete against other providers of telecommunication services. They're also engaged in a transaction to buy Time Warner Cable, and the added scale and synergies associated with that transaction we think will be very powerful for generating free cash flow growth, something we focus very strongly on. And so the free cash flow growth and prospective returns to shareholders associated with that we think are very good for Comcast.
And how much is that a US-centric company? Because although the US economy has been doing really well, perhaps having only single country exposure is a geographical concentration risk.
There are risks associated with it, but risks that we very much like at this point. The fact that it has so much exposure to the US economy and is entirely exposed to the US economy is definitely, we think, a positive in this environment, and we very much like it because it is somewhat of a staple, as you can imagine. You know, video services and high-speed data services, telecommunication services, very much a staple for consumers, but it does have the opportunity to benefit from growth in the economy, unlike other staples, and so the fact that the US economy is growing above global Western market GDP rates, I think is positive for the company and for the investment.
And what's the second stock then today?
Yeah, the second stock I'd like to talk about is Big Bad Apple. It's a stock which has obviously done extremely well, and we still see opportunities with Apple. It's been a big position that we've held for some time, and the opportunities we see are centered around additional product sets. So we have the iWatch coming next year, as well as the prospect of margin expansion associated with the big lead they have in the smartphone market and the iPad market, and so we see continued opportunities there.
I mean, if you're in the UK, you're in the US, you look around, pretty much everybody has an iPhone. I went to Singapore recently and my phone ran out of battery. It's an iPhone 5. I went into a shop and said, do you have a charger? Not a single shop did, because they're all on Samsung over there. So, that is a big risk, is it not, that Samsung is taking much more of that global market, that they've sort of got the emerging markets, which is where most of the growth is?
I think that Samsung has done well in terms of generating market share, but the profitability of their handset business is substantially below Apple, and so in terms of continuing to drive market share, it's possible they can do that, but they're going to suffer more economic losses associated with that, and I'm not sure what capacity they have to do that. So Apple, in terms of its competitive positioning, is very well positioned to compete against Samsung, including in the low end of the smartphone market.
Stephen, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.